G'day everyone, welcome back to another episode of the Australian Property Investment Podcast. I am thrilled to get on a previous guest who's graced the airwaves in a previous episode, which we'll bring up and share as well. We're talking Peter Raptis from Acumentus, who is a valuer with, I'm going to say, over 30 years of valuation experience.
36 now.
36, mate. I'm not going to give away your age. You look incredible. I've actually got very much beard envy, mate. It's looking solid.
Yeah, it doesn't require a lot of work. It just happens. I just let it go.
That's a sign of a good beard. Mate, I want to say thank you very much for joining us. We're going to talk about the property market. We're going to talk about what you're seeing, the world through your lens. We had a really good chat before we jumped in here about how much the property market has really, I won't say surprised us, but how strong it is at the moment, right?
Yeah, look, it's been interesting the last few years because we had COVID and so on. And last year, certainly prices in Sydney went up just over 11%. And then the previous year we had a correction, but then the year before that in 21, prices went up about 25%. So I think this year we'll see a continuation of price growth, but I think it will probably moderate. But the analogy I always use is like we're in a car travelling forward, but sometimes not always at the same speed. So,
yeah, okay.
Yeah, so but it seems like you can just about throw anything at the property market. It still keeps going.
Have you seen any, and that's I've seen 10 years in mortgage broking.
Yep.
So I can really reflect on the last 10 years and what's happened, which has been a really strong 10 years. But over 36 years, does this market surprise you?
It does a little bit because we've, over the last, say, 15 years, we had the GFC and everyone thought, okay, well, the market's going to crash. And it didn't. It corrected slightly. It probably came back about 10% after the GFC and then it took off. And then we've had the pandemic and everyone thought, okay, well, this is it really now. This is going to be like, the end of the market and it's going to crash considerably. And it didn't. So then we've had all these rate rises. And again, we had a correction, but, I'm not convinced the correction was just because of the rate rises, because normally after a boom, and I've seen it, as you mentioned, over 36 years, every time there's a boom, in 2021 we had a boom, then the market just corrects itself. Yeah. So we have a love affair in Australia with property. We really do. It is a serious obsession. It's not just for investors, it's owner-occupiers as well. And that underpins the market. But we've also had, in recent years, pretty strong migration levels, which has probably been above average, to be honest, and that all obviously causes demand.
Absolutely, it does. I'll go back to your point around, the love affair that we do have with property. I think anyone sitting on the sidelines trying to get in is going, the bubble's got to burst at some point, and they're waiting for that time, whereas everyone that's in it's going, how good's this? Like, I'm in and I'm set.
Yeah. I think you shouldn't wait. If you can afford to buy, you're in a position to buy. So that's all set up. They've come and seen yourself and you've got them all sorted. They should buy. The trick to it is not to buy anything at any price. It's still try and buy well at whatever time that is. But to say, maybe I'll put it off because the market will burst. At the end of the day, Aaron, it's a long-term investment that you're making. This is not something that most people buy and sell in 12 months. Some people do, but that's the vast minority of people. So it's a long-term thing. If you're buying a family home, you're probably going to have it for 5, 10, 15 years. Yeah. So I think, if you're in a position to buy, you should be buying, because otherwise you're just going to chase the market. Because I guarantee you, most years, the market goes up. It doesn't go down. In 36 years, I've probably seen prices come down 5 times. So we had that in 2022. Yeah. So 5 out of 36 means the other 31 years the market went up. And the problem is that you're just going to keep chasing those rising prices. So I just say if you can get in, do it now. Don't put it off.
And out of those 5 years, for example, and this is something I was reading, I think we just had a chat about the Alan Kohler's quarterly essay.
Yeah.
Really good research. And in there he talks about what really drives, what's the levers around price growth, and what really stunts the price growth is banks contracting with lending policy. And that's really the only time that we've seen prices be impacted. Because you look at the GFC, banks really contracted with lending. You look at 13, well, we had over a period 13 interest rate rises. That decreases people's borrowing capacities. The interest-only caps that we had a few years back, I think it was 14, 15 from memory. When they had those caps and then living expenses really got kind of scrutinised, it was the start of that real responsible lending coming into play. That really kind of stunted the market as well. And so what the gist of it was, the market's the market until the banks intervene and really start to kind of put the screws down.
Look, and sometimes the lenders will do it of their own volition. Other times you'll get a royal commission and stuff is thrust upon them. But I've noticed the difference in lending from 36 years ago, right? And it's far more prudent than it was. And
even from when I started to now, it feels like cowboy stuff when we were 10 years ago, where if you had a credit card, the banks didn't care. If you had a HEC set, the banks didn't care. They didn't even, living expenses was not a thing when I started. And now everything is under scrutiny, right?
Exactly right. So, banks aren't in the business of losing money. They like to see profits grow each year. So they can pick and choose what they lend on and who they lend to. And you're right, that can make it harder for people to borrow money, and that can certainly have an impact on the market. They suddenly decide that a certain postcode, they're overexposed and they don't want to lend as much money there, and then it just makes it harder. So, but I think there's a lot of dynamics at play. It's the cost of funds, how that's changed. I tell my students at university that I bought my first house and I was paying 17% interest, and they just can't fathom it. They go, that's just unheard of. And now you get people paying 6-7% interest, and they think that that's just outrageous because a few years ago they were paying 2 or 3%. So it is relative. So you have interest rates, you have migration levels, you have planning policies that change as to what can be built. There's this whole thing now around affordable housing and trying to create greater supply. So, there's a lot of dynamics, and then you get something like a GFC that scares people out of, say, the share market, and they go, well, let's just put our money in property. It's so much safer. So there's quite a few dynamics that sort of occur to create the market.
Not that you would be, because I think you play the fairly straight bat when it comes to lecturing, and you're not going to venture off that path to move into politics.
Yeah.
But if you were running housing and planning, we've got all this migration, we've got, I think building approvals have fallen to 12-year lows. You mentioned about affordable housing. Are we in a housing crisis? And if we are, how do we solve it?
We are in a housing crisis. There's no doubt about it. And the reason for that is, if you have a look at migration in the last few years, it's literally doubled. The net migration level has doubled.
And you can actually see it.
You
can see it at the cafes, you can see it in hospitality, you can see it, the amount of jobs that you can see that fresh face of the country.
It's quite interesting that you say all that, because it wasn't that long ago that if we had net migration of 180 to 200,000 people, it was reasonably high, and then the government would say, well, maybe we need to scale back a bit. Last year we had just over 500,000 net migration, which was literally a doubling over recent years. Now, I can't say I know this for sure, but I'm sure a way of getting out of the the pandemic, was create demand, right? So how do we create demand? Well, let's just get more people in. And I have said this, that one of the most valuable commodities, and I hate to refer to humans as commodities, but is people. The more people you can bring in, you create demand. And I think that's what's happened, and this is why we do have a genuine housing crisis. But it's a double-edged sword, right? Because if you cut interest rates now, it's going to push prices up. So when you push prices up, how does that make housing affordable? So you kind of can't have it both ways. So you need to be able to find that balance. Just another interesting statistic, if you don't mind, is the unemployment rate.
Yeah.
So, and where I'm going with this is that a lot of people are jumping into the market now because they're expecting that rates will be cut at the end of the year. So let's get in now. I'm not sure that it's going to happen. Now, I could be wrong. But unless we see unemployment really go through the roof, so let me put that in perspective. Prior to I keep saying the GFC, prior to the pandemic, from 2014 to about 2020, unemployment in Australia varied between 5 to about 6.2%. And we seemed to survive as an economy and everything was okay. At the moment, it's 4.1%. So it's still a long way off what we had pre-pandemic. So unless we see a big spike in unemployment, and inflation's still a long way off the target of 2 to 3% that the Reserve Bank wants. We're sitting at 4.1. And it would have to just about be at the bottom end of that 2 to 3% range, if not below, before we get rate cuts. So I think, how do we create affordable housing? We just seem to keep creating this environment where prices go up. And so unless the government says we're going to really scale back on migration, I'm not sure we're going to fix that problem in a real hurry, because it is a problem.
Yeah, right. It's absolutely. I mean, I was up in Brisbane this week, and there's another tent city that's rolled up into Brisbane on one of the ends there. I was like, this is wild. Like the rental crisis up there is unbelievable. People can't get. We're talking about 0.1% vacancy rates in some areas.
Yeah, so it wasn't like, gee, how did this happen? It was very deliberate. It was deliberate by increasing migration. So the migration has been able to fix, a shortage of labour, but also create demand. But the flow-on negative effect is we don't have enough housing stock. And you just mentioned about building approvals. Well, that's not helping. We need more building approvals. So I don't think it's something that's going to be fixed in the short term unless they really just do an about-face on migration.
So what's the unintended consequences if we cut migration then, for example?
Well, you're going to cut migration. It's going to take the heat out of the property market and the rental market, that's for sure. So some people will be happy about that. So if I'm a tenant, I'm going, oh, well, there's a lot more to pick and choose from and what's available. But then that will have a drastic impact on our economy, on demand. Because it's not just about renting a property. You then have to furnish it and all that kind of stuff. And when you bring people into the country, they're also spending money on travelling and food and all of that kind of stuff, and luxury items where they can afford it. So that's why it's a double-edged sword. You sit there and say, okay, cut migration levels, take the heat out of the market. For a while it becomes more affordable, but that's going to affect the economy. And politically, no government wants to be presiding over, let's say, a recession or a very soft economy. So that's what drives them. If we want to talk about politics, politicians, they're there for federal level 3 years. We've got an election coming up next year, and it's all going to be about how do we get re-elected again.
Without doubt. I think John Howard said, no one ever got mad at me for increasing the value of their home.
Well, that's right. So, as I said, there's two sides of the coin, you know. One side of you says, I'd like to see my wealth increase and property prices go up. But then on the other side of it, how does the first home buyer afford to buy into that property market? Right. How does somebody come to Australia and find somewhere reasonable to rent? Yeah. So it's like when interest rates went up, right? A lot of borrowers were affected and hurt and upset. And then you had a lot of retirees who said, oh, this is great. Yes. I just got a pay rise. Yeah. So, you know, as I said, two sides of the coin.
Yeah. And back to the point about migration, I read a stat that new migrants will typically like to buy a home or will buy a home within 5 to 10 years of arriving into the country.
Yeah.
So and that's a damning statistic where they're so hungry and eager, they will do whatever it takes to get themselves into a position to buy.
The other thing that I noticed is that migrants that are coming here, the amount of people that then pack up and leave and say, well, Australia wasn't what I thought it was, has actually reduced. So people that are coming here as migrants are staying here. They're not necessarily sort of packing up and going. And I think that's right. You know, you're right about the shopping centres. I mean, if you spend enough time in a shopping centre, it says a lot about that location and so on. And you can see, you just go into the food court and have a look at all the shops and who's running those food courts. Right? Very different to 20, 30, 40, 50 years ago. And it's no different to my family background when all the Greeks and the Italians came out and they were running all the takeaway shops and the fruit shops and all that kind of stuff. And it's just the same thing. Yeah. You know, a lot of people sit there and say, oh, you know, it's all changing. And I'm like, it was exactly the same when, you know, the English came out or the Irish came out or, you know, then it was all the Europeans came out. Then there was a lot of Asian people that came out. Yeah. And I said, that's what makes our country great. And they will do that. The first thing they're thinking of, we've got to buy property, get a roof.
Totally.
And I said this to my students the other day, and they're straight out of high school. And I said, you must buy at least one property in your life. If it's just going to be the roof over your head, do not spend the rest of your life renting. Yeah. Because the future will catch up with you, and one day you'll be retiring and you'll say, oh, I'm still renting. What do I do now? Correct. So I think that's right. Migrants will work pretty hard. And you see them working hard.
They'll work 2 jobs. I've seen it.
They'll work 2, 3 jobs, whatever it is. And just like my parents did, 10 of them will move into a 3-bedroom house.
I've seen it, yes.
So they can all get ahead. And the same thing's happening now. So, and I say good luck to them because I love hard workers. You know?
Show me hunger in the belly. And,
yeah.
Where there's a will, there's a way. And all it takes is one of them in their community to break through and get a property, and suddenly they're all following suit going, if they can do it, I can do it. Just like someone coming here in their community going, if they can move to Sydney, I can move to Sydney as well. Yeah. So the mindset in Australia tends to be buy property. You know, I'll look at my family background in Greece, and it's not really like that. They think we're crazy. When I tell them how much we borrow here and what we do, they go, crazy. You know, you're going to have all this debt. They have a different outlook on real estate. And you go to other European countries and Europe just do not get the Australian property market.
No.
Europeans just cannot get their head around
They're happy to rent their whole life.
Absolutely. And they get that, and their system is built for that. They can get long leases. They've got favourable terms, for example. Pet friendly. The system is kind of accommodating for it. Whereas here, and I say this with all due respect, but people that feel that they're renting are felt to be made inferior as well, right? Yeah. Not only is it insecure, but they're also made to feel inferior.
I think every person that rents, I'd say 99% of them think, I need to buy something. This is just my stepping stone.
Yes.
No, not many people think, I'm just going to rent the rest of my life.
Yeah, and that's a better outcome than owning Very few, unless they're investing very well and they're able to supplement their rent with some type of investment income.
Yeah, you don't need to be a Rhodes Scholar to sit back and look at how your wealth and lifestyle increases by buying property and just watching its capital gain occur without you having to do all that much.
I mean, we're just talking about some of these sales just beforehand. We had one, so for our listeners that know regularly, we live down north of Wollongong, suburban house, sold it a year ago for 1.7, went back on the market, sold for 1.9. They've done nothing on that property, 200 grand uplift, take out your costs, for example, stamp duty and your agent's costs, they're still ahead of the deal. And there's no way that family could have saved that much money in a year's time. You had one, I think,
over at Tamarama, and it sold within the space of 18 months it went from 17 million to 22 million. Now, okay, that's a different league, but they hadn't done anything to that property. So somebody made $5 million for doing nothing in a short space of time.
Yeah.
So if you could suddenly make $5 million, I think you could retire quite comfortably.
Absolutely. You know? And people argue, look, you still need to buy somewhere, you still need to live. I'm like, yeah, that's great, but they've sold for an absolute monster. They're going to be able to buy something pretty comfortably.
Yeah. So I think what happens, Aaron, is that everyone sees how much money you can make in property and how you can increase your lifestyle. So that's why we seem to be driven here with let's buy property and set ourselves up and set up our kids as well.
Totally.
So it's not the same all over the planet though. It's but we have that obsession here, and that's why I think the market generally is pretty resilient.
Absolutely. So when we look around and we look at the property market, what else are you seeing around the grounds, whether that's locally, whether that's New South Wales based or zooming out to a national level?
Okay, so Sydney has always been a strong market. At the moment, what I'm seeing that's a little bit noticeable is that Melbourne seems to be dragging the chain for whatever reason.
Isn't it odd?
Yeah, so Brisbane's going well.
Going gangbusters.
Perth is going well. Even Adelaide's going well. You know, the sleepy city of churches is going well. And then you got Melbourne dragging the chain there. So I'm not sure what it is down there, whether they've been more affected by the rate rises, whether their leverage or gearing levels are higher, or whether they haven't had the same income growth, like salary or wages growth. But they seem to be dragging the chain. But the rest of the country's going well. Do
you feel Melbourne... I mean, because everyone talks about this correlation between Sydney and then Melbourne kind of follows suit, for example. Whereas I think the median property price in Brisbane has now pipped the median property price in Melbourne. And that surprises a lot of people. And they're going, well, is it a state-based thing where, you know, they've got a lot of debt and that's then the drag that's from a political level, a tax level is really putting the handbrake on property prices?
I think that's right. I think you're spot on there. I think during the pandemic, different states handle that differently. And I think Victoria, they had fairly harsh lockdowns and so on. And so I would suspect a lot of businesses were more affected down there, which then has a flow-on effect because it's suddenly not just your business that struggles, it's the rest of your lifestyle and your family home. So, but Melbourne normally has been in sync with Sydney. Yeah. So when Sydney's going gangbusters, so's Melbourne. So it's a bit odd at the moment. And then you get somewhere like Queensland that it's normally good, but it seems to have exceeded itself at the moment. Yeah. And I think, again, you'd probably get a lot of people that have moved interstate, better lifestyle. They thought Queensland's more affordable and so on, and that's then had a flow-on effect into their property market. So... But generally the markets around the country are okay. It depends where you are within any given city, even in Sydney at the moment. If I talk to the agents in the eastern half of Sydney, they'll say There's still got a shortage of stock. They've got plenty of buyers. But then you go to, say, the western half of Sydney, and there's probably a bit more to pick and choose from. And in those areas, you find people struggling a bit more with interest rates.
Yeah.
But it also, even in the east, it depends on the price bracket. So if we go to the eastern suburbs of Sydney, $10 million plus, they're less affected by rate rises.
Yeah.
But if you're in that, say, $3 to $5 million bracket, they're probably feeling the pinch just as much as, say, somebody in the western suburbs. But we're not seeing sort of mortgagee sales. We're not, you'll hear of the odd one, but that doesn't say that that's what's happening everywhere. So we're not really seeing that. And properties are generally selling quite well at the moment if they're realistically priced.
I mean, realistically priced, I've spoken about this, there's price guides, and then you see consistently they're sold well above those. So I think they're realistically priced to get a good amount of people coming through them, and then what they're selling for continues just to defy logic. Sometimes it's some people going, geez, it surpassed the price guide, and obviously it's sentiment driven at that point as well.
I have a good relationship with a lot of real estate agents, and I can say, despite what some may think, most agents are pretty good.
Absolutely.
Trustworthy, honest.
Absolutely.
There's the occasional one that's a cowboy, but most of them are pretty good.
Yeah.
But the price guides in general, I've always said to people, whatever the price guide is, add 10 to 15% and you'll probably be in the ballpark. Don't go just by the price guide, because I've never seen too many properties sell at the price guide. And I guess it's just that. It's just a guide to give you a rough idea that this is kind of where it might be, but more often than not, and especially in a buoyant market, it's going to go well above the price guide. But I'd say use 10 or 15% as a minimum.
I like that. That's timely. That's been around since I think my older brother bought his first property. That's I think early 2000s. It was like whatever the agent's asking for, put your 10% on that. So I feel like that's not a new phenomenon. It's been around for quite some time.
Yeah, I think that's right. That's exactly right. So you do get people that get disappointed and say, I can't believe it. And I said, look, it was never going to sell for that. It was always going to be more. So I think as long as you're realistic, if you have realistic expectations, not only as a vendor, but certainly as a purchaser, you'll be able to transact. And that's the key, because you'll look at a property and your problem you'll have is you might have your heart set on it, but there might be 3 or 4 other people who are really keen on it, and only one person's going to buy that property. The other 3 or 4 sort of miss out.
And I think there's elements that you can't, that are intangible when someone's looking to buy a property. I'll give examples. My parents live, you said your son's
same suburb.
There we go, right? So there's a price point, there's a premium attached to when he was looking to buy, going, I'm in the same suburb as mum and dad. And so that commands a slight premium in his eyes compared to another buyer who goes, I wouldn't pay that much.
Yeah. I mean, you've got to look at your personal circumstances. So people often ask me, say, Pete, where should I buy? And I'll say, I'll go and buy in Bellevue Hill because you get great capital gain. And not only will they say, well, I can't afford to buy there, but the second thing they'll say is, but I don't even know anyone there and my kids don't. Why would I move from 20 kilometres away to go to Bellevue Hill? And it's true. Why would you? So it is your personal circumstances that you look at, because, a couple of weeks ago, a month or so ago, there was that $200 million Powerball. Remember that? Yeah. And so everyone was looking at how they were going to spend it.
Don't we had an office suite guy.
So we're all sitting around going, okay, you've won the $200 million. Where would you buy? Because everyone's saying they'd upgrade their house. Yeah. And a lot of us were saying, well, why would I move out of the area that I'm in? Because I've got all my friends that I've had for decades, all my family are around here. I'm part of the local soccer club, netball team, whatever. I'm going to move to somewhere where I don't know anybody and re-establish myself. So for a lot of people, it's about their lifestyle. What do I need? And you're absolutely right. somebody says, I want to be here because family is up the road. And that was the same thing with our son. He wanted to be close to us.
Yeah.
He could have moved somewhere completely different, and it may have been a lot more affordable for him. But he said, no, I want to be close to, his sister and his parents and his uncles and aunties and friends.
Yeah.
So that comes into play when you're buying, because you say, I want to be here.
Yeah, great.
And if you pay sometimes a small premium for it, you'll get it back.
Oh, without doubt, it's the happiness element that I think sometimes when people buy on price and they have to move somewhere, there's damning research that shows how unhappy they are because they've had to buy on price and they've usually compromised 2 out of the 3 on their checklist. They bought on price, but everything else has dropped off.
Yeah, it's exactly right. So it's a balance of all of those things, and as I said, it will vary from person to person. If you're an investor, you might be driven differently because you're looking at buying, I don't know, an industrial property, and it's all about the rent and the yield and so on. You're not going to be visiting your investment property every week, whereas you might be visiting your family and friends every week. So, and that's what I've said to people all along. Don't worry about what everyone else is doing. You've got to worry about what's right for you. You've got to think about where you want to be and what you need to do, and what are the circumstances that are right for you. So some people, it might be about their kids and their education.
Correct.
And they want to be near particular private schools, so they will move into that area for that, and that's fine for them.
Yeah.
And other people are happy to send their kids to wherever.
Absolutely. But I guess the common element there with your son, with people that we're dealing with, and I'll say it time and time again here, is the property market rewards action takers and decision makers.
Yeah.
And I guess we'll go back to one of the conversations we had earlier around people that are waiting. And when I talk about people that are waiting, I'm like, look, guys, girls, there's sunk costs. So you may be renting. So over 2-3 years of rent, and you take an average rental around $600 a week over 52 weeks, we're talking about 30 odd grand there. The market is moving, and the city market moves at a pace of almost $1,500 to $2,000 a week. So you've got you're negative $600 on a rent, plus the $1,500. It's $2,100 a week that you need to be in the market. You're not saving that. You're not saving to that effect. So you're not keeping pace with the property market's going. So naturally, it's going to leave you behind. So there's a sunk cost that comes with it, but then there's the opportunity cost of being in the property market. This property is increasing at say 10%.
That's why we've seen the emergence of the bank of mum and dad.
Isn't it wild?
Because you need to, because otherwise you are going to fall behind. It's guaranteed.
Yes.
Whoever said all those decades ago paying rent is dead money, it's true. I mean, you do it as a means to an end.
At a time in your life, correct.
I need to do it, and that's fine. But as a long-term strategy, it's crazy stuff. And especially in recent years where interest rates were so low,
yes,
why wouldn't you take out the mortgage instead of renting? So, and even now, interest rates are still relatively low to what they have been historically. But see, what we're seeing is high rentals as well. So there must be a lot of tenants out there going, why are we renting? We could go and see an Aaron and get a mortgage here, and we're in the same boat, but at least we're buying something, not renting. So, I encourage people to, if you can buy, you go and get yourself out of rent, because you're right, the longer you leave it, the worse off you are. Okay. I'll give you an analogy. It's like people that play the poker machines, right? They go and play the pokies and they come home and they say, I won $500. I go, yeah, you did today. But if you play for the next 12 months, you'll be behind. At the end of the year, you'll be saying you're down by $5,000. So you can't look at it as a one-off. You look at over a longer term. So, and rent's the same. And waiting's the problem. Waiting's probably the bigger problem. So let's say in Sydney, a $2 million property, because yes, there are properties at $1 million, but a $2 million property, and the market has raced ahead at, let's say, 7%. which isn't huge growth. That's $140,000 that property has raced ahead that you've been waiting. How did you go saving that $140,000 in that year? You wouldn't have done it. Yeah. So you're behind. So if you can buy it now for $2 million, or even if it's at $1 million, buy it now, because you're just chasing that market and you're never going to quite catch it. Yeah. So like I said, in 30 or 35 plus years, it's only a handful of years that I've seen the prices have gone down. So if you can predict when the market's going to go down, good for you. But most people can't, because who saw the GFC coming? Nobody. Who saw the pandemic coming? Nobody. So you can't predict these things, and it's also government policy. You know, who's going to win the next election? What are their policies going to be? We don't know. So just bite the bullet is my advice.
I love it. And so this makes sense at a rational level,
as opposed to emotional.
Correct. Which, again, it's like, how do we connect the dots to go, left brain to right brain, for example? Go, this absolutely makes sense. Is renting? Are they caught in a mindset, for example? Is it, I don't have the right team, the right self-belief? Obviously, we're moving into an area that's part psychology, but I mean, you've been around this world for long enough to go, this actually makes sense when you have the opportunity to do it. Why aren't you taking action?
I don't think it's necessarily the mindset of somebody says, I'm just going to rent forever. I think most tenants, it's short-term. Their aim is to buy. Yes, there will be some who, that's just what they do. And we talked about Europe before. They love renting their whole life. We're different here. So I think the mindset is more about, I don't want to change my lifestyle. Right? Okay. So to get ahead and build up and get that deposit, we've got a saying in Greek that translates to, when you've really got to do something, if you have to do it, you will put both of your feet into one shoe. If you've only got one shoe, you'll put both of those feet in there and you'll make it happen. And I think that's the thing. I think most people, we generally have a good lifestyle. We might not think,
cracking lifestyle in this country.
It's a great lifestyle. Yeah. People go on their holidays, they go to their restaurants.
Yeah.
There's all the online shopping that goes on. My house is full of, my daughter, my wife, my sister-in-law, my mother-in-law, and all I'm doing is opening the front door every day because this package is being delivered. Right? So we have a good lifestyle in Australia. We go on our holidays. We've got our all our gadgets. We have nice cars and so on. So once you get used to that, to try and cut back, a lot of people don't want to do it. But if you're going to be young and get ahead, you need to make those sacrifices. I remember, you would have done the same thing. I remember making those sacrifices, being Saturday night and saying, look, we're just going to order a pizza and stay home. And we're not going to go out. And
Peter, I mean, just to jump in on that point, I've spoken to a lot of families. I'm like, look, mate, I'm still making those sacrifices. We're not doing the cafes with the kids on the weekend. I mean, that used to cost us $90 for a couple of bacon, egg rolls and coffees and baby chinos. Mate, we're doing some pancakes at home. And that $90 is going to savings. Now I think I was even saying before, the cup of coffee day isn't changing your life, but what you're doing is you're making changing a habit to go, I'm doing this for the greater good.
See, there's been a generational change, and I don't want to go on about it too much, but you go back to, say, World War II, and people after that didn't have a lot, and they had a very basic lifestyle. My parents' generation as migrants, very basic lifestyle. When I started, I didn't have a lot, so I didn't think anything of it. I look at my kids' generation now, and they've got everything, So it's harder for them because they want to have all these things. Whereas I didn't have anything, so I didn't think of it. You bought a car and you bought a beat down second-hand car that was 10 years old, and that's what you drove around in until it literally fell apart. Okay. Whereas today, everyone...
I see P-plates that are in some incredible cars. Yeah.
And I'm like, that's great. It's good.
Progress, yeah.
But it is progress. Yeah. It is, because our lifestyle has improved, but it makes it harder to then try and save and get ahead. I think people have got the capacity to do it. I look at the kind of income young people are making now, and I think that's just phenomenal. Yeah. So they've got the capacity to do it, but do they have the willingness to make those sacrifices and say, well, we won't keep going on an overseas holiday each year. Maybe we'll do it every 5 years and we'll just save money. So they have the ability to do it, but as you said, I think it's partly the mindset. So I don't think the mindset is let's stay and rent. It's we want to buy, but do I have the mindset to make the sacrifices? And it can be a bit of a shock for people. What do you mean? I've got to get rid of my 6 streaming services and only have 2. We're not going to go out to dinner twice a week. We're only going to go once a fortnight. And that can be a bit hard for people. Because the other thing that's changed as well is social media. We're also conscious of what everyone's doing. Everyone's plastering on Facebook about their holiday, and here I am having lunch, and you think, okay, well, what are we doing? Why aren't we having the holiday?
That's what it is, isn't it? What are we doing wrong?
Yeah. Whereas it's really in your face now, whereas it wasn't before. I get a bit over every time somebody's having a cappuccino, they need to send me a photo of it, and I'm like, mate, get over it. It's a cappuccino. I've had one too.
I love it. Hey, just before we wrap up, putting your valuer hat on and going out there, if someone's listening and they go, Peter, what do I need to do to get the best valuation?
Valuation
on my property. What do I need to do to prepare?
So we can't do the brown paper bag trick anymore, right? So no brown paper bags. But what can you do? Certainly when a valuer turns up, try and make your house look presentable. And
which surprises me. Does that surprise you?
It does surprise me. I went to a property not long ago and I was gobsmacked how it was presented. It was terrible. And when I say terrible, it wasn't like, I'm not talking about the kitchen or the bathroom needing renovation. It was just stuff just lying around everywhere. And I'm like, you got the valuer coming over who wants to, you want them to give you the best possible assessment. And, so make the house look presentable as best you can. That certainly helps. Just little things. Make sure the pool's clean. Make sure you've cut the lawns. That it's not all overgrown and all that kind of stuff. So presentation is important. A valuer will walk through a property and go, "Well, it's a nice looking property," or you can be literally, and I mean literally, tripping over stuff on the lounge room floor and in the kitchen, and because people just can be quite messy at times. So that doesn't give you a good impression of that property. So
this is a first impression of a property we're trying to create here, right? So
look, I remember as a house buyer walking through a place and saying to my wife, I just don't have a good feel about this place. It just doesn't. I don't think I can see us living here. It just doesn't feel homely. And then other places, I went to a place the other day. I was just like, this is amazing. This is just unreal. Everything about it, from the front gate to the back gate, was just immaculate. You could tell that these people love their home, and so it was really well presented. So you can just do the little things, as I mentioned earlier, to make it a bit more presentable. And if the property has any issues, so, a valuer's going to go, why is there a big yellow stain on the ceiling? Hopefully you've got an answer. At least you can say, we had a cracked tile, we had the storm the other week, and we had some rain damage, but the roof tile has been out, the tiles have been replaced. I'm just waiting for the painter to come through and fix that up. As opposed to, oh yeah, I've never noticed that before, you know. So if your property does have some issues, don't leave it for the valuer to try and imagine what it might be. Try and at least explain it to them.
Beautiful.
Yeah.
Sage advice, mate. Thank you very much. I think it's a really good way to wrap, and I think we're going to get you back on at some point again.
Happy to.
I love having you on, mate.
Chatting to you.
I agree, mate. You got words of wisdom, and you got so much insight.
Thank you.
Not only your time, but I think the way you're able to distill that as well. I often say to people, do not underestimate the power of a good valuer in your corner. Obviously, it's someone that they can't choose their valuer.
No.
But they choose their broker, or they choose their accountant or planner. You can't necessarily choose your valuer. But I think as a profession, there's a certain standard, there's a certain measurement that valuers are kind of upheld to and upheld by.
Yeah.
And I'm like, look, get them on your side.
Well, exactly right. You know, so you can provide them information as much as you can if you're aware of sales, all that kind of stuff. But even with, say, brokers, don't see them as the opposition. You know, we're all conscious of what everyone's trying to do, and we're not necessarily trying to be an obstacle in anyone's way, but we are trying to assist in the process. And, you know, if you can have a good relationship with a valuer, certainly brokers, it goes a long way.
I think you're right there. I mean, the broker's sentiment to valuers is throw the valuer under the bus. So it's the valuer's fault when it comes in short, for example, as opposed to actually popping the hood on it going, how did we get to this number? And has the client just pulled this number out of the air as an optimistic valuation, or is it closer to market? And I guess working in with, we have to take your valuation as is.
I think it's like anything. If you can have good relationships with whoever, and certainly in a professional life where I have a good relationship with the lenders and say people in their, like banks, in their property risk area, where I can ring them and say, look, I think I've got a bit of an issue with this property or this valuation, and we can have a chat. That's really helpful to me, and it's helpful to them. And it's the same thing with brokers and even owners. And I often say to owners, is there anything you want to point out about the property that I might not be aware of? And it could be something as simple as we've got underfloor heating in the bathroom. That as a valuer, you won't see it.
Yeah.
Right? So, a good valuer asks lots of questions from everyone, but at the end, they make up their own mind.
Beautiful. I love it. Thank you very much. I really appreciate it. If you've loved what Pete's saying, then please leave us a review or drop us a question or a comment on our YouTube as well. Otherwise, feel free to connect with Peter on LinkedIn. I know you put out some great insights and reports that come out from Acumentors, so I look forward to reading those when they do come out. I appreciate your time. Thank you.
Okay, take care.
That's a wrap for another episode of the Australian Property Investment Podcast. We'll talk to you soon. Thanks.